Yo, what's up, guys? Investors are not happy today. Our portfolio is currently down 5% the past month, so our portfolio hasn't been doing good. Our Moomoo account right here, we're actually down 1% just today in here. And I want to show you a stock specifically that is really in the news right now. I don't know if you've heard, but there is a lot of wildfires down there in California right now. So this is actually ticker symbol EIX. They're the utility company that owns pretty much all the electric utility lines and everything in California. So, if you have a house down there, it might be powered through ticker symbol EIX. And check this out, they are down literally 10% on the day. And as you guessed it, because of the huge fires there, it literally burned down a ton of their own utility power lines. So it's gonna, cost a lot to fix that. Luckily they have insurance. That's what I read on a couple articles here, that they have insurance for this kind of stuff. But they said there's going to be a new regulatory outlook for this company. So there might, be some changes there. But they literally tanked 10% on the day. I want to show you this right here. We can see their net income right here. They're a really big company. They made $500 million in the most recent quarter. And look at their dividend yield. They have a 4.8% dividend yield. Now, a lot of people just don't want exposure to California, and I get that. So I just wanted to show you the stock, though, that they're literally down 10% on the day solely because of those wildfires. We also have some crazy news. The NVDA CEO said he doesn't expect quantum computing to come around for at least 15 years. And look what happened to RGTI stock. Quantum stocks have really been what everyone's talking about. It's the next wave. But this company fell 45% on the day. And here's why, even after this dip, I probably wouldn't even touch this one. I'm still going to avoid it. Their price to sales ratio is 161. So they're trading at 161 times their sales. And look at their sales right here. This is honestly not the kind of company that I'd want to own. I get it's probably going to grow in the future, but their sales are literally $2 million and they're down 23% year over year. And if we look at the net income right here, obviously they lose money every quarter. That's actually all right. I'm not mad about that. But the sales are just so tiny here. So I wouldn't even touch this one. Like D-Wave, Quantum, I actually just saw an interview. The CEO came on CNBC and just had a little talk on there. Look at this one right here. This is another one that they have literally no sales. Their sales are $1.8 million, down 27%, and they lose money every quarter. And they even have more liabilities than they have assets. So honestly, I would stay away from all these, quantum stocks. The only one I would touch is actually Google, because I believe this company has the money and the talent to be the industry leader. And I actually own a little bit of Google stock, so I might be a little biased here, but hear me out on this. I promise this will impress you. Just look at their net income in the most recent quarter. Google made $26 billion, and that's actually a new record. It's up 33% year over year. There's never been a quarter before this that's been over $26 billion. But remember that number. What is Google doing with $26 billion? Well, let's go to their stock buyback program. They literally spend $15 billion every single quarter buying back their own stock. So that's why the stock never goes down. Google just buys it back. And on top of that, look at their dividend right here. Their dividend only cost $2.5 billion, which, they made $26 billion just in the most recent quarter. So that's a 10% payout ratio. And I get it. The yield is only a 0.41%. But what I'm saying is I feel like there's going to be so much future room for them to grow their dividend. If they stop doing stock buybacks, they switch from 15 billion of buybacks to 15 billion of dividends every quarter, Google would be going insane. And they're proving to still be an innovative company. They just released their quantum chip called Willow. But look at Google's Google Cloud business. This is some incredible growth. This is up 35% in the most recent quarter. This is an incredible growth rate. It's a very high margin segment of their business as well. So anyway, that's why I own Google. I actually own them here in my Robinhood account right here. We own 13 shares of Google. It's been one of our better performers. We're up 18% on our shares. But yeah, that's why I think Google is just a buy and hold forever company. And I also want to mention that I'm really saying the unpopular opinion right here. I'm bearish on RGTI stock because look at this. This company just loses money every quarter. And this just gives me PTSD from the time that I invested in ChargePoint stock. Let me show you this right here. I took an incredible loss on this company. And this is why I just want to give a warning and why I think it's so important to just pay attention to the actual financials of a company. So look at this at the bottom here. I sold 66 shares of ChargePoint, or my entire position, at $2.85, and look at it, at a huge loss. And thank goodness I did that, because it's even lower now. And let me show you where I was buying this one. Like right here, I bought 6 shares at $11. That's back there. I was buying shares. Yeah, look at this right here. I was buying shares over at $20 a share. So we basically lost 90% of our money on ChargePoint. If you're wondering why did ChargePoint go down so much? What happened with this company? Well, just look at this right here. They literally just can't get profitable. They just lose money every single quarter and they never even got close to profitability. And if we look at their sales on top of that, so not only are they losing a ton of money, their sales are declining as well. And that just reminds me of rickety computing. Their sales are declining and they're losing net income. Now, there could be some future growth, but I'm not certain about it. And I'll buy it in the future, maybe if the financials get better. But look at this ChargePoint. Their sales are down 10% and they lost 77 million just in the last 3 months. And look at the market cap. The whole entire company at the top right is worth 495 million. So that's over 10% of the entire company just in the past 3 months. So, I'm saying the unpopular opinion there. So that's my little warning there on why I think it's important to look at financials. But on the other hand, if the financials are good for a company, they will grow. Like, check out this stock right here. This is one I actually have on my watch list. I wouldn't even mind buying them right now, but this is BBW, Build-A-Bear Workshop. We've all probably heard of them or see the stores in the mall. And look at the market cap. They almost have the exact same market cap as ChargePoint. Look at this, $571 million market cap. But let's look at the difference between ChargePoint and Build-A-Bear. Look at this. They are making net income every quarter. So this is a net income positive company. And if you look at the PE ratio right here, they're literally trading at 11 times net income, which, isn't even crazy. And on top of that, they have a 2% dividend yield. I'm about to show you, if you're a dividend investor, you might actually find some interest in this company. They're also debt-free. This company has zero debt. But look at this. In the most recent quarter, they made $9 million. They have that one quarter, where they made $22 million, Q4 at Christmas time. So I wonder what their net income will be next quarter. But let's just assume $10 million they make a quarter. Let's see how much their dividend costs. Literally $2.69 million. So they have a very healthy, very sustainable payout ratio. On top of that, like I said, look at the total debt here. This company has zero debt. They don't owe anyone any money. And how much cash do they have? I want to show you that as well. Yeah, look at this. So again, the market cap is 600 million. So actually $30 million is pretty meaningful on a company that has no debt. So remember, 30 million of cash and another $70 million of clear and free inventory. So, a lot of assets on hand. And if we look at the stock buyback program here, this is another insane thing about this company. They're buying back their own stock. And if we look at the total common shares outstanding right here, you now own 7% more of the company. I mean, this is incredible, super impressive for such a small company like Build-A-Bear. Now, I get it. It's not the most high quality company. You're not going to get any awards for owning Build-A-Bear, but I just think this is such a fascinating stock. I have them on my watch list and I potentially, they're down 8% on the day. I'd love to maybe grab them around the support line, maybe around right here, $38 a share. That would be a good entry price for me. But again, if you want exposure to a stock, I recommend to slowly buy into it. That means dollar cost average into a position. Like right here, look at Disney stock right here. I wanted exposure to them, so I slowly dollar cost average into them. And on top of that, I also bought one share of Disney today. So that's kind of why I wanted to mention Disney. They just acquired Fubo TV, or 70% stake in the company. But also check this out right here. You know how I said dollar cost average into a stock? Make sure you're dollar cost averaging into a high quality company. Make sure you're not dollar cost averaging into ChargePoint or Barrion Network. So do your own research. Look at the fundamentals of a company. So yeah, the main point here is to really just avoid the ChargePoint kind of companies, avoid the quantum waves, and look for the Build-A-Bear workshops. Look for the companies making a lot of net income, low payout ratios, doing crazy buybacks that are such shareholder-friendly companies. So yeah, if you found any value or learned something, or you appreciate the transparency, don't forget to drop a like on the video. And if you leave a comment, I'll respond to all of them. I really appreciate y'all being here. Hope y'all have a great rest of your day.